Good evening, everyone, and welcome to yet another virtual FOF. So, today we have a very special topic by our analyst, Rohil Gandhi, and he'll be covering something that I find extremely exciting. At least when I see a green number plate car on the street, I get very excited because I think it's the future of automotive industry. Uh, and today's session will be again the standard FOF format where Rohil will walk us through the presentation and we will have ample time in the end for a Q&A. So in that time, you can just keep your messages and questions in the chat so we can compile the questions later, or directly in the Q&A, you can unmute yourself and ask your questions. Rohil, over to you and we can start now. Yeah.
Thanks, Ronak. I think even my favorite part of seeing the EVs on the road is the green number plate only. It just makes it easier to distinguish. But yeah, okay. So let's start. So today we'll go through the entire EV ecosystem, not just the OEMs. And I'm starting off with this slide because this is one slide that I've seen across all presentations or any talks that have always been there on electric vehicles. And this slide is basically depicting disruption and the speed of disruption, right? So in the year 1900, where there was just one motor vehicle as compared to innumerable number of horse carts, and just 13 years later, we had just the one horse cart and many more motor vehicles. So something similar is poised to happen in the electric vehicle or the automotive space rather. And we'll see how challenging and what the path will be for that, for this disruption to continue. So currently, the EV space is completely narrative driven. So we can see a couple of examples. I won't be taking the names, and these are not investment recommendations, but just some of these stocks, the kind of returns that they've given despite not having the numbers yet. So just to show that how narrative driven and investors are looking for the next disruption. So company A has returned almost 15x returns in just about 2 years, and this is like the poster child of EVs listed in the US. And this company just recently turned profitable last year. If we see company B, so this is a Indian listed company. And earlier, the core business was setting up power generation units in India. However, in April 2021, which is just about 4 or 5 months ago, they bought a 43% stake in one of India's first electric motorcycle company. This stake was bought at just about 150 crores, valuing the company at about 350 crores. So the EV company in which they bought the stake had sold about 2,000 units in calendar year 2020. And after this acquisition, so since that acquisition, company B has returned 4.5 times roughly to the shareholders. And this is after a 40-45% drop from the peak. So we can see the kind of handsome returns that this company has already generated, despite not having the numbers or the volumes yet. And the last company C, it's somewhat a controversial company. So this company had advertised a prototype electric commercial vehicle in the US, and the share price had risen by 5 times between March to June 2020. However, after some news flow that the vehicle that they had advertised was actually pushed down and it was not a functional prototype, mainly, the share price has really dropped by 85% till date. So you will see all kinds of companies and startups coming in this space, but investors are looking to, this is a space that they see to get some good returns over the next decade or two. So I'll be talking about the entire electric vehicle ecosystem. So within this ecosystem, you have your raw material suppliers, which will be your steel, aluminum, and so on. So those will be your commodity companies. The auto component manufacturers. I've separated battery manufacturers considering how large a component it would be within the EV ecosystem. the automotive OEMs, charging infrastructure, as well as battery recycling. Battery recycling is something that is still very in its nascent stages as yet, especially because it will follow the growth of the electric vehicles, and still the volume of electric vehicles globally as well as in India is still very small. So as this industry grows, it's likely to give a rise to the battery recycling space as well. So majority of my talk will be focused on battery manufacturers, automotive OEMs, and charging infrastructure. And post that, I'll run through some of the listed entities in India through which an investor can participate in the electric vehicle growth narrative. Yeah, so let's have a look at the electric vehicle OEMs first. So just a brief history, this technology is not something that was very recently discovered. Rather, electric vehicles were first discovered in the 1830s. There is so the credit is actually shared by a few people. So one is Robert Anderson, who's a Scottish person, and an American by the name of Thomas Davenport. So they are the two main people who are credited with the discovery of electric vehicles. Electric vehicles first came into commercial use as e-taxis in New York City in 1897. So almost 60 years after after this technology was discovered. In 1895, just to give a context, Carl Benz had actually he had discovered the technology for internal combustion engine vehicles, which are the vehicles that we use today. However, that got commercialized after Henry Ford found a way to mass produce them in 1908. So actually, the first picture that we saw, it's only after 1908 to 1913, within a period of just 5 to 7 years, is when the mass adoption really began. So the reason in the first place that EVs did not work despite being there in our history for such a long time is basically the cost of running an internal combustion engine vehicle was far lower at that point. And now, since the battery costs have declined, there have been a lot of upgrades in the technology and new findings. This has actually led to a new focus on EVs, and these are some of the reasons why the EV adoption is actually rising. So apart from the battery costs, environmental norms are also becoming a lot more stringent, and governments across the world are focusing on this. So that has also led to adoption of this technology. Government push through incentives across the world has again been very critical in trying to kickstart the use of electric vehicles. So is it just that it's because of the fall in battery costs and the incentives that are there today that EVs are being preferred? It's not just that, in my opinion. It's actually because the operating cost of an electric vehicle is significantly lower than a internal combustion vehicle. So it's almost 5 times cheaper to charge to charge an EV as compared to an ICE vehicle, and it has like 100 times fewer moving parts, which makes it a lot more easier to maintain, thereby reducing your maintenance costs as well. So the operating costs of an EV are significantly lower, and hence there's a use case for the EVs, and this is also one of the major reasons why the adoption is now rising. Yeah. So governments across the world have given their timelines as to when they would like to phase out the diesel and gasoline vehicles. So these are the hard deadlines. So some of the countries have been mentioned here, but largely if you see, the years 2035 and 2040 are more or less recurring. So these are the kind of time frames that most of these companies have set themselves to be completely diesel and gasoline and engine free by that time, and just focus on the electric vehicles. So before I dive a little deeper into the sector, there are some terminologies that I'd like to clear. So ICE, or your internal combustion engine, or the gasoline and diesel engine. So these are this is basically your ICE engine, which is what we use in the modern vehicles today. Yeah. Then there's something called mild hybrid, which is basically just a supportive backup and helps to increase your fuel efficiency for your gasoline and diesel cars. But it's not typically your electric vehicle per se. It's just something that is helping to improve the overall fuel efficiency of what is otherwise a gasoline car. Plug-in hybrids, or PHEV, these are vehicles which can give you a running of your daily running of about, say, 50-60 kilometers can easily be done on the electric battery that is provided in that vehicle. But for longer distances, you still have to use your gasoline and diesel fuels. Then there's your battery electric vehicle, or BEVs. That is your 100% running only on the electric batteries. And then there's something called fuel cell electric vehicles, or hydrogen vehicles. So these vehicles use hydrogen as a fuel source and are also considered to be low emission vehicles. And so again, something that I have noticed or has been happening is that a lot of people consider hydrogen fuel based vehicles as non-electric vehicles, but in fact they're actually considered as electric vehicles only. So they do form part of the when we talk about EVs, it's not just your battery electric, but also your fuel cell electric vehicles. So some of the reasons, as we earlier saw, for the adoption of EVs is mainly the environmental norms. And if we see, so while this chart is a little busy, what we see is, despite all the different types of fuels that are currently available, be it gasoline, diesel, your CNG, this is inclusive of a mix with the biofuels, that's your ethanol blend and so on. These are the level of greenhouse gas emissions that are expected via the study done by the ICCT report. And we can clearly see that battery electric vehicles and fuel cell electric vehicles are some of the lowest polluting vehicles. So the optimal mix in the industry is likely to be decided based on the emission targets set by the government in the future. Incentives have been another major push in the EV space. So in India, we have something called FAME incentives, which is faster adoption and manufacturing of electric and hybrid vehicles. So they are in their second phase, their second cycle. And these are so some of the incentives that they have announced are as follows. So for two-wheelers, they have allotted 2,000 crores, where the maximum selling price at showroom, not on road, at showroom, has to be not more than 1,50,000 rupees for that vehicle. The incentive available for the two-wheelers is at 15,000 rupees per kilowatt hour. That's how your battery size is estimated. Just the way we have a 50-liter petrol tank is the same thing for the batteries in that case. The maximum incentive per vehicle for a two-wheeler is at rupees 60,000 per vehicle. And the maximum number of vehicles that can be supported is about 1 million two-wheelers. Three-wheelers, they have allotted about 2,500 crores. Four-wheelers is just 530 crores, and 560 if you include the four-wheeler hybrids. And electric buses is about 355 crores. So if you can even see from the government incentives that a lot more focus is currently being placed on the two-wheelers and three-wheelers, which is clearly being seen as the best place segments to adopt EVs in the near future. So just doing a rough comparison between the ICE vehicles and the EVs in the two-wheeler space, considering that there are a lot more models in the real world today on road. So Activa 125cc, which is the highest selling two-wheeler, that has a peak power of 6 kilowatts and a maximum speed of 85 kilometers, as compared to your electric vehicles, which is your Ather 450X, TVS iQube, or even Ola S1. They're at similar maximum speeds, and the power also is quite comparable. In fact, Ola has a much better power as compared to the Activa. The range, however, is a lot lower for your electric vehicles. But again, it depends. So one can say that this range is lower, but however, the daily usage for most people on a scooter is not more than 20-30 kilometers a day. Maybe if you're the office is really far or something, you'll end up using 40-45 kilometers a day, which is also on the higher side. The battery, so the cost ex showroom, if we see in Bangalore, the cost of electric vehicles is about 15-20% higher than the ICE vehicles. However, on road, your Activa and Ntorq will also cost you about 95 to 99,000, which is comparable to the Ola, which would also cost you about 1,05,000 roughly. However, X subsidy, if we remove the subsidies that the government has given, as we saw in the earlier slide, the cost significantly increased for these vehicles. So the differential between before subsidies for these EVs compared to the current scooters is so high that there would definitely be a second thought on whether to purchase an electric vehicle or not. So at this stage, it is the adoption of EVs is completely driven by the incentives. Similar thing on the motorcycle side. So currently, there's only one offering that is Revolt. But however, the peak power offered by that model is significantly lower by two of the highest selling motorcycles there. And the range also is considerably lower. And motorcycles are more often used for longer distances as well. So it is important to have a larger range for motorcycles as compared to your scooters, at least. So, what are some of the challenges for electric vehicles? So, from the consumer perspective, as well as from the OEM perspective, and why is it that the existing OEMs have not been aggressive in this space? So, let's try to figure that out. So, first thing that we've been hearing is range anxiety. As we saw, the range of each of these vehicles is significantly lower. And even for a four-wheeler, the Tata Nexon, which is the highest selling electric four-wheeler currently in India, the range is about 180 to 200 kilometers, which is not sufficient for long distance travel, but can only suffice for daily commuting within the city. Availability of charging infrastructure. This is another major pain point for the consumers, as they need to be sure that they can charge their vehicles at any point and can easily avail of those facilities. Charge time. The charge time, again, for a four-wheeler, it takes about 1 hour to charge it up to 80%. And even for a two-wheeler, it takes about 45 minutes to charge for 80 up to 80%. So, sorry, for four-wheelers, the charging time is on the higher side as compared to the two-wheelers, and these are reasons why electric vehicles are, for a consumer, it's difficult to adopt them, especially while you're traveling. If you have to take a halt that is longer than 1.5 2 hours, on a fast charge also, if it takes you 1 hour to get to 80% in a four-wheeler, then it's something that you had not planned for that, but now you have to plan, and you have to be sure that you have sufficient range in your vehicle so as to get to the next charging station, or not get stuck somewhere between where you are and your final destination. There's a high dependence on government subsidies, which is again some, so it's, this is a factor that is also considered from the OEM perspective, that the profitability for these vehicles is extremely low currently, and rather they'd be loss making. Different requirements for different segments, leading to higher cost of R&D. So we'll elaborate on this point a little more in the next slide. Higher rate of change in battery technology. So again, there's a lot of innovation continuously happening, and better technologies are being discovered, which can make the current battery technologies obsolete. So the rate of change makes it difficult to for any OEM to really pursue just one technology and get really aggressive. So they're taking a more cautious approach from that perspective. Electric vehicles are currently loss making, so the profitability obviously is much lower. So what the existing OEMs have to really decide is whether to opt for a loss making vehicle and really aggressively push that, or you sell your current gasoline, diesel vehicles, which are actually generating a lot of cash flow for them, which can later be utilized for the R&D, not just in electric vehicle space, but a lot of other areas as well, especially autonomous vehicles and so on. So that is a choice that they have to make, and they have chosen to continue generating the cash, investing. And when the time is right, when they can see a clear path to profitability, that is when they decide to get aggressive in this space. So that can be a little tricky, considering startups currently are a lot more focused on just the EV space and not so much on the profitability. So it can get tricky, and there are fears or concerns by a lot of people whether the startups would, take up the entire market share, and there'd be a first mover advantage for them, and the existing OEMs would be left behind. So while those concerns are there, but they still decide to take a lot more cautious approach, because there are a lot of different technologies, and we'll try to understand that a little more in depth. So the last point is something more unique towards India. So you need to have a continuous supply of electricity, especially in the rural areas, if the adoption is going to be up to 100%, because you can't have periods where there is no supply of electricity, but you really need to use your vehicle and you can't charge it. And we know that in rural India, access to electricity is still quite measured. So that again creates a big challenge for EVs. So while this slide has nothing to do with the EV space, but what we can see in this slide is just how many different segments are there in the automobile sector. So you have four major segments: the two-wheelers, passenger vehicles, commercial vehicles, and three-wheelers, within which you have further segmentation in terms of scooters or mopeds, and even motorcycles. In passenger vehicles, you have the smaller hatchbacks and sedans, and then you have your utility vehicles or even your multi-purpose vehicles. And in commercial vehicles, you have your smaller trucks or LCVs, and the large trucks, that is the MHCVs. And the same with three-wheelers, where you have passenger and goods segment. Even within two-wheelers and PVs, you have a further segmentation for personal and commercial use. So the requirements of each of these segments is quite different. In your normal ICE vehicles, that technology could be adopted across all these segments. However, considering the range restrictions on a lot of the technologies in the EV space currently, there's no one size fits all kind of technology, and hence different technologies have to be used across different segments. So, for example, for a commercial vehicle, the requirement is for a longer range. So they need something that can maybe drive up to 400, 500 kilometers at a stretch and not have to wait for every 200 kilometers, take a halt and then charge for an hour. That is something that is not feasible for commercial vehicles. Whereas if we get a 100-kilometer range as we do today for your scooters, it can actually be it can actually work really well in the markets today, because most of the scooters are actually just being used for uh, within the city use itself, just for daily running. So each segment has their own requirements. As newer technologies get adopted, there can be a differentiation in strategy also that can be followed apart from the technology itself. So what OEMs can decide is whether to go in with fixed batteries, which requires a extensive charging network, or a battery swapping where they have swapping stations. So a battery swapping would not require any change in consumer behavior as well, but a fixed battery would actually require, especially when you have to go home every day and put your vehicle for charge, and god forbid you forget, the next day your vehicle is not charged and you're left stranded as to how to travel to your workplace or anywhere else you have to go. So a battery swapping station can actually just take care of that. Like how you go to your petrol pumps today, you can just simply go to a swapping station, get the battery changed within 5 minutes, and continue your daily running requirements. Detachable batteries. So recently, the government of India came out with a notification saying that electric vehicles can now be sold X of the electric battery itself, which really reduces your upfront cost, because the electric batteries can cost as much as 40% of the total cost of building a vehicle. The optimal mix by for the OEMs, whether to have battery electric vehicles only, or a mix of hybrid electric vehicles, or even alternative fuels like your ethanol based or CNG or hydrogen. So there are other options, and what is the strategy that they wish to adopt. So that is also something that they need to figure out. Again, in terms of distribution, we have seen the likes of Ola, Tesla, all of these OEMs have actually adopted a direct to consumer, which eliminates the need for a dealership. And this can actually save some margins, considering that about 4 to 5% of the cost of the vehicle would be the margin for a dealer. However, how this distribution model would really work for existing OEMs is something, and whether that is more feasible or a better way, it's something that is still unanswered. However, consumers would always prefer a dealer in some sense, at least if they have a lot of maintenance requirements, or just especially in the initial stages when the technology is still new. And the last is outright sale or leasing options. In India, we don't have a large leasing option model available, but Maruti has been trying this out in a few cities, and have been slowly increasing that offering across cities. So whether to lease the vehicle, which can actually bring down your initial payments and so on, or a outright sale. So all these different strategies, along with the different technologies, along with the different requirements of each segment, These are a lot of decisions that any manufacturer has to take today, uh, and just stick by it. And if they're wrong, then the risk of being wrong is they would not be able to compete in the future. And hence the cautious approach that you see from a lot of manufacturers today. So just some pros and cons about battery swapping. Uh, so the pros are that it really reduces the cost of the initial cost of acquiring the vehicle, as batteries would be leased and you'd be paying a monthly subscription. So about 40% initially is what you land up spending less upfront. It eliminates the long charging time, alleviates range anxiety, better grid load management, because maybe all the vehicles are being put to charge at night where it can overload the grid, as compared to swapping where it can be charged across the day whenever the need arises. Easier battery recycling and disposal. So this is still very nascent, and we've not seen this as an issue just yet because the volumes are still low, but it can potentially help to a more organized manner of battery recycling and disposal. No change in consumer behavior is required for battery swapping. Some of the negatives, however, are that you require a standardization of the battery packs across the vehicles, and the consumer is likely to always question the reliability of the leased battery pack, whether that battery pack is good enough, or will it, does it have the capacity to run the kilometers that is promised to you. So some of these questions are always there. So yeah. Some of the other challenges are the low confidence in terms of financing these vehicles. So we see there's an operations and maintenance risk in terms of because this is a new technology and there are no electrical engineers at your local dealerships. How they operate and how they maintain these vehicles might require a different expertise in that sense. uh, Customer risk, utilization risk. So, in terms of utilization, uh, for financiers, there needs to be a higher utilization of these vehicles at the OEM level if they have to provide financing for the to the OEM directly, or even the dealership. So the utilization levels have to be on the higher side. If we see the asset risk, there's a technology risk. Considering the rate of change of technology today, there is a good chance that the technology that is being used today might be obsolete just 10 years down the line. And if there is no resale value of the vehicle down the line, then the financier might be left with a vehicle which is obsolete. And hence that creates an additional risk for the financier. Policy risk, again, if the governments decide just to focus on battery electric vehicles only and not hydrogen or CNG or any other vehicle, it can really drive down the value of the resale value of those alternative options. And the manufacturer risk. So the considering that while this industry is something that is definitely going to grow in the long term, there will likely be a lot of the mortality rate within this industry is going to be pretty high as well. Considering the number of startups, not everyone is going to be successful. There will be a lot of failure. So there's a lot of manufacturer risk as well. So all of these reasons actually lead to some higher interest rates or low LTV ratios or limited financing options that we see today, or even higher insurance rates for these vehicles, especially because the cost of the vehicle is higher, so your insurance premiums are likely to be higher. And when we see, especially in two-wheelers in India, about 40 to 50% of the vehicles are financed. In four-wheelers, it can go as high as 70 to 80%. And and in commercial vehicles, it's even higher at about 85, 90%. So clearly the automotive industry is highly dependent on the availability of good financing. And what happens with electric vehicles, especially because their initial costs are higher than your modern vehicles, even if the interest rates are the same, your actual absolute EMI costs are significantly higher considering the higher initial costs that you have to bear. So this makes it a lot more difficult to speeden up the entire adoption process for EVs. So addressing the fact whether the incumbents are far behind the curve when compared to startups who are very aggressive uh, and growing at a very good rate and taking market share from the existing players. So does that mean that the incumbents won't survive and or probably will be left with much lower market share? So if we see this chart, so in the automotive industry, patents are not something that determine the success of the uh, company. However, this is just to show that there is a lot of work being done. Now, for example, the highest number of patents filed in India for EV powertrain technologies is by Honda Motor. And Honda Motor has the largest selling two-wheeler in India, which is the Activa, and also has a four-wheeler business in India. And yet they have zero EV offerings currently in the Indian market. However, on the back end, they are really doing a lot of work. This can be risky that they don't have any on-field data as to how these technologies are performing, but it doesn't mean that they're not doing any work. So that is all that this chart is trying to say. So even if we see some of the other incumbents, so Mahindra and Mahindra has already publicly stated that they'll be investing 3,000 crores over the next 3 to 4 years in the EV space. Hero MotoCorp has mentioned that 50% of their new capex will be towards EVs. Plus, they have done a tie-up with Gogoro, which is a battery swapping. That's currently a battery swapping technology that Gogoro has been very successful in Taiwan, and they plan to replicate that model in India. And they've done the tie-up with Hero. And the swapping model in terms of the EV is likely to be launched next year. That's what Hero has already stated. They also have an investment in Ether Energy. For TVS, they've invested in Norton, and also have stated to invest 1,000 crores in this space. Maruti, so the parent for Maruti, Suzuki, has a tie-up with Toyota, and also Suzuki, the parent company, is setting up a battery manufacturing plant in India. Same for Bajaj, who has a stake in KTM and is in talks to shift that stake to the parent company PRR, where they again have some EV technologies. So all these incumbents are working on the EV space. And Tata, as we all know, already have a few models on the road. So it's not like they're not working. Whether they'll be successful or not is a different question, but definitely there's work going on in the back end. Some of the global investments and collaborations that we have seen. So even this, the same thing holds true for a lot of the global OEMs as well. All the major OEMs have announced their electrification targets, which are as high as about 30 to 50% of the new sales between 2025 to 2030 being electric vehicles. The Volkswagen Group has stated to invest $85 billion over the next 5 years. There's a collaboration in Japan between Toyota, Suzuki, Daihatsu, Hino, and Isuzu to further understand the space of electric vehicles, autonomous vehicles, etc. In Asia, we have Suzuki and Toyota partnership. GM and Stellantis each have committed $35 billion as investments in this space by 2025. Hyundai is setting up a battery plant in Indonesia with LG, which will cost them about $1.1 billion. So all the existing OEMs are definitely putting in resources behind this technology, even though they may not have been as aggressive in launching vehicles as some of the other startups or other companies may have been. Coming to the next segment, which is the electric vehicle batteries. So the market share in electric vehicle battery today is that about 65% of the entire market is held by contemporary Kettle. Basically, it's a Chinese company, LG Energy Solution or LG Chem, and Panasonic. So about 65% is held by them, and some other players are Samsung, SK Innovation, and some others. So we'll try to understand why these three players are able to command such a high market share. Even in the fuel cell vehicle space, Hyundai has about 48% market share and Toyota has about a 15% market share. So effectively about 60% over there as well is just between the two players, Hyundai and Toyota. So one of the major moats for battery manufacturers are the partnerships that they create with the automotive OEMs. And this is something that we have seen in auto Anks also earlier, the ancillary companies, where they have partnerships which are 15, 20 years long. And this makes the customer a little more sticky and more trustworthy, that they would not just change their supplier the next year. So a lot of the known brands have already tied up, say with Kettle, Panasonic, BYD, LG Chem, Samsung, and so on. So what are the cost of the electric vehicle battery? So it's split into pack and cell. The cell costs are about, so the pack costs are about 30% higher than the cell costs. So this is one of the major reasons why this technology is now so attractive in terms of adoption in the future, and is likely to be the front runner in that sense. Is because so the pack in 2011 cost almost about $1,200 per kilowatt hour, which has dropped to $137 in 2020. So it's almost 88% drop since 2011, and this will continue due to a lot of efficiencies and new technologies being discovered in this space. So some of the terminology on the battery side. So there are mainly two, which is energy density, and you have your battery types. So commonly referred in the industry as LFP, NMC, NCA, sodium ion battery, solid state battery, hydrogen fuel cell, and so on. So let's discuss energy density first. The concept of energy density is basically in the same amount of space, how much energy can be stored. The higher the energy stored in the same amount of space, the larger the range, or the higher the range that you can provide for that vehicle. And that is the main concept of energy density. And as companies are able to pack a lot more energy within the same space going forward, the costs really come down for the batteries as improvements happen for the energy density. And all these different battery types, they mainly differ on their energy densities, or the theoretically speaking, what their maximum achievable energy density can be. So two of the most common battery chemistries used today are lithium iron phosphate and nickel manganese cobalt. Solid state, so sodium ion batteries are something that has been recently being worked upon, but they have one of the lowest energy densities. Solid state batteries takes away, so it's different in the sense that it does not use a liquid electrolyte within the energy pack, which makes it easier to store, which makes the energy density for that battery significantly higher than the current technology. So this is a technology that is still not in commercial use, as they've not figured out a way to mass produce it yet. So they're still working on that, but that is the next step in the EV batteries, so as to improve the range of the vehicle. And hydrogen fuel cells is so hydrogen as a fuel has the highest level of energy density. And hydrogen can be further classified into gray, blue, or even green. So why are there these different colors? It's basically the the method with which the hydrogen was extracted uh, is what determines what kind of a hydrogen it's called. Green hydrogen is obviously where there's least amount of pollution in the process of, or pollutants released in the process of extracting that hydrogen. And gray is the highest. So we've seen that since 2010, the achievable energy density in lithium ion batteries has actually increased significantly from about 200 watt hours per kilogram to 300 watt hours. And this is continuously rising. So this is one of the major reasons why the battery costs have been coming down. So lithium ion batteries have the lowest energy density as compared to your gas, diesel, and petrol, and hydrogen is the highest. Uh, because of the improvements in battery technology that we've seen over the years, this has led to a significant drop in the battery plant capital costs from a few years ago. In fact, in China, the cost is now as low as about $64 million per gigawatt hour. In Europe and USA, it is significantly higher because of a lot of variable costs or the availability of cheaper labor in China, and which leads to the cost differential. These companies have to significantly invest in R&Ds to continuously improve the battery technology and pack a lot more within the same battery. So if you see some of the major players, Kettle, Samsung, LG Chem, or even Tesla, they all, so the R&D expense as a percentage of revenue is closer to 6 to 7%, in that kind of a range. So it's a R&D intensive, capex intensive industry, which also creates another barrier of entry for any new entrants to compete with the existing players. The EBIT margins, again, this is somewhat of a lower margin business, EBIT margin being closer to 10% for the battery manufacturers, which again makes it very difficult for the smaller players to compete with the larger players, as there's a significant operating leverage and economies of scale for companies with higher utilization levels. And as we saw, because China has better economics in terms of battery manufacturing, they are able to generate a higher gross margin in that country as compared to US, where if you had to sell the battery at the same rate, the gross margin is 6 percentage points lower on estimate, and the operating margin is even lower. So as I mentioned, this industry has a higher operating leverage. So the larger players are likely to generate better margins. So we can see within China as well, Kettle, which is the largest, has a much better gross margin and EBITDA margin as some of the other players. So to summarize, in the battery space, higher operating leverage, capex intensive, R&D intensive, as well as partnerships with the existing OEMs. These create a strong barrier to entry for some of the players or new entrants in the industry. And that's why it's easier for them to maintain those higher market shares that they currently have. So there's an increasing need for make in India or localization of battery, because currently a majority of it is being imported. So to further reduce the costs for the vehicles and bring down the cost of acquisition of the final vehicle, there's a very high requirement for having a localized supply chain. So some of the technology, battery chemistries, which are likely to be set up in the future in India, is likely. So while NMC is higher preferred because it has a much better energy density, but LFP is something, despite having a lower energy density, is cheaper, and the raw materials for that are easily available in India. So the raw materials for LFP technology are basically iron and phosphorus, which is available in India as compared to manganese, cobalt, some of which are not easily available in India, and again they have to rely on a lot more imports. So even there was an article in the Wall Street Journal where they said that LFP was the mainstay battery in 2017 in China, when it was still very small, the EV market. However, because of the government subsidy program which favored longer range vehicles, which LFP cannot provide because of its energy density, they lost a lot of market share. However, once those subsidies went away, there's been a comeback in that battery chemistry. So we can see clearly how the government policies will also decide what kind of battery chemistries and technologies and vehicles are due to launch in India in the future. And this technology has also been favored by Mr. Elon Musk. So LFP also has his stamp of approval. So what he said in his tweet was that nickel is our biggest concern for scaling lithium-ion cell production due to its availability. So that's why we are shifting standard range cars to iron cathode. Plenty of iron and lithium. So in India, to incentivize the battery manufacturing and setting up local capacities, they have come out with a 18,100 crore production linked incentive scheme for advanced cell chemistry or ACC batteries. Further research on the batteries. So they've dedicated this fund towards that. So some of the requirements of this incentives are that they intend to set up a cumulative of 50 gigawatt hours over the next few years through via all the participants in this scheme. The maximum that a company can claim as benefit within or incentives within the scheme is up to 20 gigawatt hour. And there's another requirement of localization of up to 25% within the first 2 years and 60% within the 5-year period. So higher dependence on make in India, clearly boosting that as well. And one of the other requirements is that all the investments in setting up this capacity has to be incurred within the next 2 years itself. So clearly, there's a lot of push towards localization in India to further bring down the cost for electric vehicles and increase the adoption. So we're likely to see a lot more push in EVs 3-4 years down the line when all these capacities come online. So some of the investments in India, our Amara Raja has decided to invest $1 billion over the next 10 years to create a 10 gigawatt facility. even though the minimum requirement is just 5 gigawatts to claim the incentives, which I mentioned earlier. Suzuki, Denso, and Toshiba have set up that battery manufacturing plant, which will cost them about 5,000 crores. This is phase one and phase two combined. AmpereX Technology Limited has decided to invest up to 7,000 crores in India. Exide Industries is also likely to participate. And Reliance Industries at their recent AGM have set aside 60,000 crores for 4 gigafactories. So while this is not all towards batteries, but it includes solar PV modules, electrolyzers, fuel cells, as well, and batteries. So a part of that 60,000 crores will be towards these technologies. Coming to the third section, which is the charging infrastructure. So according to a business standard report, India would require up to 400,000 charging stations for 2 million EVs by 2026. And currently, according to the Society of Manufacturers of Electric Vehicles, there are only about 1,800 charging stations in India as of March 2021. So clearly there's a huge gap, which will again further boost the adoption of EVs in India. Just for context, currently there are about 70,000 fueling stations in India, and the number of nostrils at each of these fuel stations obviously would range from 2 to maybe 6, 7 or so. So that's the number of fueling stations that are available today. But the requirement for EVs is a lot more. But this number can really differ if battery swapping is considered the major technology, especially when it comes to, say, commercial two-wheelers or even your personal two-wheelers. Or hydrogen fuel cell is used for commercial vehicles because commercial vehicles require a longer range. So hydrogen fuel is used for that. So the number of charging stations would really differ based on the technologies that are best suited for that segment. Within charging infrastructure, so how we have different kind of connectors for our mobile phones. So you have USB Type C and so on and so forth. For mobile phones, there are different charging connectors for electric vehicles as well. But the most common is CCS2, which is widely used in India. So PlugShare, this is a app. So it's a very interesting app as it continuously monitors the number of charging stations in India and tells you exactly the location of those charging stations. And it also gives you the information as to what type of charging connector is available at those charging stations. So this is something very interesting that I came across, that there are supporting apps that are trying to increase the awareness of these technologies and charging stations as well. So this is a estimate in terms of the cost of the charger itself, not the entire charging station. Apart from the cost of the charger, there'd be maintenance fees, land lease, the personnel cost, and so on. So the cost would really increase. However, the CCS, which is the most widely used charging technology, especially for four-wheelers, the cost of that charger itself is about 15 lakhs, closer to 15 lakhs. And the additional cost for land lease and everything could easily bring the cost up to 30, 35 lakhs or even higher, depending on the area and location. So this is just for one charging port, so which can charge one vehicle at any given point in time. So Magenta Power is a company which is trying to set up a charging infrastructure in India. And in a recent interview, the MD mentioned that on a normal DC charger, one can make money only if used for 5 charging sessions a day and continue to use it every day for 5 consecutive years. So, and considering that the volumes of EVs are significantly low, and even the global utilization rates of these chargers are at best, if we see, sorry, at best about 26% only. So it is very difficult to make money, even though they may be able to set up the infrastructure. They might be disheartened by the kind of payback that they might expect from the charging infrastructure in the future. So, all in all, what I believe is that in any technology, the adoption life cycle moves from techies to visionaries who want to try new things, or early adopters, basically, to the early majority or pragmatists who like to use it when the technology is ready. Conservatives who are sure that there are no issues, I will not face any battery problems or range anxieties and so on. And finally, people who thought that it's not possible for this technology to succeed in the long term. So what I believe is that we're somewhere towards the early part of the early adopters phase in India, at least. And there's a lot of work still to be done, but this is definitely the technology for the future. Again, not investment recommendations, but just different ways that one can get exposure to the electric vehicle theme in India today. So some of the companies that are listed and are likely to benefit from the shift. So this is not an exhaustive list. There will be far more companies, but these are just some of the companies that I came across. So if we see manufacturing OEMs, you have Tata Motors, Hero MotoCorp, Bajaj Auto, Maruti, M&M, TVS, Ratan India Enterprises, which owns a stake in Revolt, Bharat Forge, which again has a stake in Top Motorcycles, which is still to launch their two-wheeler, even Ashok Leyland. And any new startups, if they ever get listed, they will also fall under this category. Battery manufacturing side, there's Amara Raja, Exide, Reliance Industries. However, the percentage of business from this space would be fairly lower for Reliance. BHEL, even JSW Energy. In terms of charging infrastructure, Tata Power, NTPC, Indian Oil. So Tata Power and HPCL have actually done a tie-up for the charging infrastructure. So even HPCL would fall under this list. Auto components. So there are specific components that are required for the electric vehicles, and so like the electric motor, which so these ancillary companies would also really benefit. Apart from that, there are also companies whose value addition would really increase as there's a shift towards the electric vehicle space. So there's Sona Comstar, which is a very recent listing. Bosch, which had actually for the last 3 odd years, they have actually done a major restructuring to align themselves with the futuristic technologies. And this is not just electric vehicles, but also autonomous vehicles and so on. Minda Industries, which is also continuously trying to launch newer products which are related to the EV space. Endurance Technologies, who have a aluminum die casting business, and the need for aluminum might increase because as the weight of the vehicle, as the more lightweighting of the vehicle, the better the range. So these are some of the technologies that are likely to benefit. So in auto components, there will be far more companies that I have mentioned here, but these are just some of the companies. Battery recycling, very, very smaller business, but Tata Chemicals has said that they have started work on this. But again, it's going to be something very, very small. And raw material suppliers, again, your steel, aluminium. So your commodity companies which can benefit from a continued adoption of such technologies. And then finally, there's a third order effect. Basically, beneficiary industries from moving towards electric vehicles. So logistics would be one of the best spaces, as the operating costs would really drop, and this would really help them. Or even the companies like Uber, Zomato, DoorDash, Swiggy, all of these companies which work on unit economics would really improve if they are to use electric vehicles, and the cost would actually drop by almost say 70-80% on a per kilometer basis. Uh, Also, Airbus is continuously working on a zero emission commercial aircraft, which is more likely towards hydrogen fuel. So, and they're targeting to launch it by 2035. So, while this is a really long term, but if they're able to do that, the dependence of the aviation industry on crude oil as their petroleum source would really reduce, and that has been one of the biggest costs for that industry. So if this comes to fruition, your airlines can actually really benefit from this technology. So uh, while it's easier to say that this technology will definitely get adopted, uh, there is a large third order effect as well. And to understand that better, I'd recommend this book called Clean Disruption of Energy and Transportation by Tony Seba. So he's actually not just the disruption from electric vehicles, but he's actually try to connect how different disruptions like the growth of renewable energy through solar cells and so on. All these come together to really benefit and bring down the cost even more. So what we pay as electricity costs, say up to 10 rupees per unit, can actually drop even further if we use the solar cells in the future. So how all of these new technologies can really come together and have a completely different impact than just any single technology all by itself. So and this industry is definitely something that will grow considering all its use cases in the future. So this would be a very interesting read. However, I would warn in terms of the investments in this space. So, Rajiv also had a very recent interview, just I think about 2 days back, on the technology space, new age technology companies, where he mentioned that the mortality rate for a lot of these new age technology companies is likely to be high, especially when they're smaller. It's the same thing in this industry as well. Considering the number of startups and companies trying to get a share of this space, there will be a lot of mortality risk, or that the companies go out of business. And that is something that one needs to be aware of, despite knowing that this is the technology of the future and this will definitely be successful. But which company will actually land up taking the major piece of the entire pie, that is something that is still unclear. So they have a very interesting space to track, and we'll continue tracking it in the future as well. So some of the sources that I've used, I've mentioned here, and I've even provided the link. So this presentation will be shared later on. So the some of the links to the reports are also mentioned on the slides itself. And these are some of the other magazines or articles that I have been reading to keep track of this space. Yeah, thanks. I can take questions now.
Thanks so much, Rohil. It was a fantastic presentation. It
Thanks.
reminds me of the Amara's law, Roy Amara, the American researcher, made a law saying that we tend to overestimate technology in the short run, and we tend to underestimate its impact in the long run. So I think kudos to all the early adopters who have really
Yeah.
driven the path or paved the path for us who are conservative or waiting for things to come at a larger scale. So please, I would ask people to just unmute yourself and ask your questions, or you can just put in the chat, and I will relay the questions to Rohil.
Hey, Ronak, this is Akash. Am I audible?
Yes,
Yeah,
we
you're
can hear you,
audible.
Akash.
Hey, Rohil, thanks for this great presentation and a lot of learning points.
Thank you.
Two questions. Basically, if you can give some more clarity on the recharge infrastructure, to give you the example of Apple and other products in Europe, which went through just, making the chargers uniform across Europe, and Apple is the only one which does not have one for its products, right? So that is the first point. And the second one is, over this recharge infrastructure. I mean, in today's world, if you just go to a petrol pump, you can just fill up as much as you need, right? And if there's a bun, you just go one day before and get it filled, right? But with EV infrastructure and, is there a unified website like an Airbnb for recharge stations that is being planned, or, just throw some light on it?
Sure. On the charging infrastructure, so the uniformity in terms of the connectors, there's a lot of understanding within the manufacturers themselves is to try and have a more standardized use. So currently, if you see within India, most of the charging connectors use the CCS connector itself. And a recent report that I read, so despite Tesla having their own connectors, a recent report stated that in India, Tesla is thinking of using that CCS connector itself. So OEMs are also very well aware that if they have a very different charging connector, they will have to set up their own charging stations, which can really add to the cost, especially in the short run, considering the different amount of technologies that they have to invest in and explore going forward. So that is something that is being worked on, I'd say, more behind the scenes and more of a understanding basis, but nothing from a policy perspective. Coming to your second question, can you just repeat the second question, please?
Is there an Airbnb like a unified platform that is being created to track down every EV charging point of station? Because every manufacturer, every battery type would not be consistent, right? From a user perspective at least.
Right. So the app name that I shared, Plug Share, that keeps track of all the different charging stations. So despite who the infrastructure provider is, whether it is Tata Power or somebody or a Magenta Power, whoever it is. So that keeps track of that as well. And they also mention which kind of charging connector can be used at that station. So there is work happening on that front, but still the number of charging stations in India is still fairly low. However, there is understanding within the OEMs as well. So again, this is something towards your first question itself. Tata has actually tied up with Morris garages as well, where they can charge their vehicles at a Morris garage showroom as well. So that's pretty unique that a Tata car being charged at another OEM's showroom, despite the showroom being the place where all your consumers are going to come and going to look at your vehicles. But if you're seeing some other brand's vehicle, so there has to be some level of understanding there, right? So there is a lot of collaboration that is happening on this space, and especially to save costs as well and to further incentivize consumers to start using this technology.
Thank you. Thank you for answering that.
Thank you.
Ranjil, you can go ahead and ask your question, please.
Hi, thanks, Rohil. Great presentation. A lot
Thank
of
you.
information. I just had one question. So we've already established the fact that battery is a very important link to make sure that the whole EV revolution sees the light of the day. And the fact that over the last so many years the cost of batteries have gone down. What incentive does it give a battery manufacturer to be in this space, despite the fact that eventually my cost is going to go down 10 years down the line, or whatever. So like how do the battery manufacturers think about it and make the most of this opportunity? Thank you.
Right. Great question. So it's not that just the cost, or rather the selling price for the battery manufacturers, that is going down, right? The only reason it can go down is because the cost of production is also dropping at the same rate, if not at a faster rate. So if we saw the EBIT margins that these battery manufacturers had, say, over a 4-year period, it's been fairly constant around that 9-10% kind of a range. So the margins that they can generate, especially considering this is a very small industry currently growing at a very rapid pace, and the size of the business can be enormous in the future, especially. And or electric vehicles is not the only space. There are energy storage solutions, and there are many other such applications for these batteries, especially the second life of the lithium ion battery. So all these reasons, it makes the scope for the market size of that entire industry really large in the future. So to get a major share of that, they have to start providing these technologies today, invest in learning about other chemistries or so on, and generate a good 9-10% margin. So, and as we saw, the barriers to entry are also equally strong. So it's not that very easily somebody else can just come and take away your market share, and despite you putting in all the effort, you're not really bearing the fruits for it. So it's a journey which will continue.
Fair enough. Thank you.
Thank you.
Kalpesh, you can go ahead and ask your question, please.
My question is with respect to, in connection with what Rajil asked, as you mentioned that margins in battery manufacturing is a little bit lesser. So my question is, which part of the business, like where you see margins are a little bit higher? For example, is it into raw material supplying to the EV industry, or maybe vehicle manufacturer or battery producers, or any ancillary services? Which businesses do you think this ecosystem will make more money, or is the margins are higher?
So actually, across this industry, largely there's a lot of so especially on the OEM side, currently it's loss making. But if you see Tesla's financials on the automotive side, they've actually been able to generate a 20% up to 25% margin in the last few years. So as the volumes increase and efficiencies improve, the margins are actually improving. And but currently, if at this point in time, maybe some of the ancillary component providers might have a better margin profile, but it's not that they will remain the best place. Maybe even the battery manufacturers can improve their margins to a certain extent, or even the OEMs can really improve their margins as the volumes really start to grow.
Okay, so can you just name few OEMs worldwide who is doing very good in this space and are making very good money? Because those OEM manufacturer would definitely like to connect some or other space, companies, organizations in India, either through their own subsidiaries or through some tie-ups, and try to grab the market share of this vast Indian market.
Right. So currently, to my knowledge, Tesla is the only one who's shown any kind of profitability in the EV space. And that's one of the reasons why a lot of other OEMs have not been as aggressive, is because they don't see a clear path to profitability just yet, because there's still a lot of improvement that is required to happen. So because there's no clear path, they have continued to sell the current vehicles and which are generating a lot of cash flow for them. So yeah, in terms of other OEMs who are really making money at this point today, to my knowledge, there aren't others just yet.
Okay, thanks. It was a wonderful presentation. Thanks.
Thank you.
Well, there's a nice question in the chat about Ola Electric and its
Yeah.
effect on the existing players. So what happens if the 1 million EV two-wheelers come on road by 2021?
Right. So definitely that is one of the fears, but we've seen that all the other two-wheelers, Bajaj, Hero, TVS, even Royal Enfield for that matter, everyone is actually working on the EV space, and Bajaj and TVS already have one offering in the space. TVS is going to launch two models next in the next calendar year. So there is a lot of work happening. So Ola Electric will not be the only player, and there are a lot of other startups as well. But Ola Electric definitely seems to be one of the most aggressive companies today. Also, one more point to note is that if we go back to the incentives provided by the under the FAME subsidy scheme, up to a maximum of 60,000 can be provided per vehicle. However, generally the battery pack sizes in two-wheelers is about 3 kilowatt hour batteries. So that would equate to a 45,000 rupee subsidy in two-wheelers. So if I take an average of 45,000 rupees subsidy per vehicle, and the maximum allotted funds under that for electric two-wheelers, then the number of vehicles that can actually be financed currently, as per the math, suggests it's only about 450,000 odd vehicles. So it will really depend on what kind of incentives or new policies that the government comes out. So it's not going to be easy for even Ola to reach that 1 million target so easily, despite having a production capacity of 2 million initially, and then they can scale it up to 10 million. So it's not going to be so easy. They are also going to be dependent on the government subsidies, and at the same time, there's a lot of work happening on the battery side as well. So as the costs come down for that and profitability becomes a lot more clearer, the existing OEMs will also leverage their distribution network to really launch new products in that space a lot more aggressively.
I think one final question, since nobody else has questions, and feel free to ask if you have any. Since the EV space is quite global, which other EV companies or the ancillary companies which you think are worth tracking, which you have tracked yourself and found interesting?
So apart from Tesla, which is like very well known to everyone today, all the existing OEMs are also what's the work that's happening. So even Tata Motors, they have JLR as their international subsidiary, and a lot of interesting work has been happening. In fact, they had launched one of the electric cars, iPace, a couple of years back. So it's not something that they have just launched. So each and every OEM is really working towards that, and it's quite interesting to keep track of that. In fact, one of the best ways that I have figured, to keep track of all these new vehicles and how they're performing, you had shared with me, Ronak, the autocar review videos on YouTube. So I think that's a very good way to keep informed as to how these vehicles are performing, what sort of challenges are people, and they're posting it on YouTube they're sharing their experience when they're going from long drives, say from Mumbai to Goa or something. How long did they take? How much time did they have to wait at their hall to charge? So, I mean, these are just giving you very good insights as to how a lot of these vehicles are, really performing on road. So, not like this takes a step away from apart from what you read in the paper or even what the company claims is the range and everything. It gives you a real world feeling as to what is happening on ground. A reality check, if you may.
So we'll take a couple of final questions. One interesting question has come from Vinay, is that what's the usual battery replacement cycle for all these vehicles? And Tesla has been around for a while with the EV cars. What has been their experience?
Right. So a lot of the electric vehicle OEMs, they provide like a 5 to 6 year kind of a warranty on the battery as well. Even then, they don't expect that the battery life to really deteriorate significantly post that. But the replacement cycle currently, to the best of my knowledge, would be say about 8 to 10 years, which is when the battery capacity would drop to about 80%. So it's not that and then these batteries can be used in different applications, just not in the automotive space, because you need that kind of a range.
So we'll take one last question.
Sure.
Many people have definitely congratulated you for the presentation.
Thank you.
But here the question is about Tata Group companies and what kind of synergies. And so, I mean, you mentioned the operational efficiencies, but if you can add something more to this, it will be useful.
Yeah, that's definitely something very interesting that the entire Tata Group has been doing. So from Tata Chemicals, Tata Power, Tata Elxsi, as you've mentioned here in the chat, Tata Motors. So definitely a lot of work has been going on. One thing for sure that'll be beneficial to the Tata Group is they'll be really able to understand each and every aspect of the EV ecosystem, which is something that other OEMs may not easily be able to understand. And if there is good information sharing, especially because a lot of these vehicles are becoming a lot more connected these days, there's a lot more information available from the vehicles itself as to how they run, the charging times, and so many more things. So that is something definitely quite interesting. But again, how it finally plays out is very different. And what the other OEMs are also doing is they're trying to collaborate with, if they don't have a presence in that, they're trying to collaborate so that even they don't really miss out on this kind of information.
Superb. That's great, Rohil. And thanks. I think this is one of the highest attended FOF talks. So thanks so much for sharing your insights. And thanks everyone for joining us on the FOF today.
Thank you, everyone.
Whenever things got rough, I always remember what my father used to say.
Running a business does test a man, my son. There are ups and downs, glorious highs, and sometimes a low that leaves you feeling defeated.
The character of a man and the character of a business are not very different, are they?
Yes. But when the chips are down, we must stand up, dust ourselves off, and motor on.
Volatility. It's a funny thing. It makes you question yourself and wonder if you've made all the right decisions.
Sure, you can question some of your decisions, but stay steadfast on your goals.
Dad always said, there are no shortcuts and no quick profits.
There are no free lunches, are there? There is only one
right way.
At PPFAS, we think like Rahul and his father. That volatility is a fact of running a business. And buying equity shares is like owning a part of that business. We use value investing principles to manage your money. This means we invest in the right businesses at reasonable prices and for a longer term.
PPFAS Mutual Fund. There's only one right way. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.